Okay, it's 3:30 New Zealand time, 1:30 EST, so we will get underway on time. My name's Gary Rohloff. I'm the Managing Director and Co-Founder of Laybuy. I'm joined by Katrina Kirkcaldie, our CFO, and together we're here to present to you our Q3 FY22 results. And we look forward to presenting this to you and answering any questions you may have at the end of the presentation. So thank you for participating, and we're within the guidelines of issuing Happy New Year's before the end of January. So Happy New Year to everyone on the call. So we'll get underway, and if we can just go to the next slide, please. Thank you. So again, everybody, welcome to Laybuy's Q3 announcement for FY22. We are extremely proud of these results as we continue to deliver on our strong growth across all our markets. And this is supported by the delivery of strong strategic initiatives and growth in our active customers and active merchants. And just to pick out some highlights here, very proud to have achieved a record annualized GMV of $1.1 billion. That's up 51% year on year. We've had a particularly strong December. The December month traditionally comes off after a heavy November that's powered by Cyber Week. We actually had a 10% uplift month on month from November to December to record in the UK $170 million, 70% up year on year in that quarter in GMV. Very proud of the fact that our quarterly income is up 42% year on year. And while we have seen an increase in fraudulent activity that has impacted our NTM, this is anticipated and has been experienced across the whole e-commerce market from the feedback we have had. The success of our app exclusives has assisted us drive this growth, and it continues to do so in the UK with now over 300 well-known brands available to our customers. We've implemented some operational enhancements that have supported the efficiency of our business and provided a better service to our customers, and I will extend a little bit more detail on that further into the presentation. We are on target to meet our revised revenue growth targets for FY22, and that too is something we are extremely proud of. If we can move to the next slide, please, Christo. So just to give you a sense of how GMV being on track to reach our $1 billion target, we're up 51% year on year. We have annualized our quarterly GMV is also up the same number. Our active customers up 35% and our active merchants up 61%. And we'll break that down into a regional breakdown in a minute. If we could go to the next slide, please. So the UK, our growth engine, significantly up year on year, up 70%. And you can see the trajectory there on the quarters just powering up in this last quarter. Our active customers up 51%. And what we're really happy about is that our active merchants continues to power up 166% year on year to eclipse 3,400 active merchants in the UK. So some of those names that you can see are very familiar globally, not least of which obviously is Amazon, and that is helping to drive our performance across this growth market for us. If we go to the next slide, we're certainly not ignoring our, next slide please, our ANZ market. We're up 28% year on year in our GMV. Our active customers continues to grow in what is arguably one of the most mature buy now, pay later markets in the world. And our active merchants up 41% year on year. And for those of you from Australia, you will recognise some of these big brands that are coming on to our platform, and we've got a few more to share with you a little later. If we go to the next slide, please. I'm going to hand you over to Katrina to give us a rundown on the financial metrics, and then I'll circle back in a little bit and talk about how we are executing on our strategy and what the 2022 looks like for Laybuy. Over to you, Kat.
Great. Thank you, Gary, and good afternoon, everybody. It's my pleasure to present to you the Q3 FY22 results for Laybuy Group Holdings. You can see from the graph that Christo's just put up on the screen that we have seen significant year-on-year revenue growth, up 42% on Q3 FY21. Majority of this growth, as you would expect, has come from the UK region, up 56% year-on-year. The ANZ region, as Gary's already alluded to, doesn't disappoint with year-on-year growth of 23%. In terms of the other key operating metrics, Gary's already covered off that the GMV has increased year-on-year by a staggering 51%. This has resulted in the revenue of 13.5 million for the quarter, which is the increase of 42% year-on-year, which I spoke to in the earlier slide. Commission revenue is slightly down quarter-on-quarter as a percentage of GMV, dropping from 3% in Q2 of FY22 to 2.8%. We have seen improvement in our margins from the app exclusives for the month of December, and we do anticipate seeing further improvement as we refine our app exclusives offering. We had anticipated some increase in credit and fraud losses during the peak trading window. The level of fraud was higher than we had historically experienced, but as Gary has already spoken to, this was not uncommon for the e-commerce sector, particularly in the UK over this time. As a result of these losses, we did see our impairment losses increase from 3.1% to 4% for the December quarter. This did result in a break-even NTM for the quarter. We do expect that the March quarter will be better than the December quarter, as history tells us that we will see an improvement in credit collections as customers look to recover from the financial burden of the Christmas period. Just on to the next slide there, Christo. This is just a summary of our debt facilities, which most of those who have followed Laybuy for a while will appreciate. We have two debt facilities to support our growth. One of those being Partners for Growth, which was a debt facility we did close out in the Q3 quarter, and we did our first drawdowns in late November. Kiwi Bank remains very supportive of Laybuy and our growth trajectories for the ANZ region. As you can see down the bottom, you can see we still have significant headroom to support the growth across all regions, something akin to double where we are as at the end of December. There's also been a question put in the Q&A in regards to the impact that higher interest rates are likely to have on the NTM for Laybuy. The PFG facility is a fixed interest rate facility, and we will actually see a decrease in our interest costs as we look to draw down on the second tranche of that £30 million facility. Kiwi Bank is a variable interest rate facility. However, the margins on that facility are significantly lower than the Partners for Growth facility as it stands. We have modelled out that a 2% increase in the interest rates would only have a 0.04% impact on our NTM for FY23. So interest is not a major component of our NTM due to our loan book turning so many times because we're a weekly instalment buy now, pay later player in this space. I'll now hand back to Gary, and he's going to speak to the strategy and outlook.
Thanks very much, Kat. If we just go to the next slide, please, Christo, just to remind everyone of our strategic plan and the three pillars that support that. It's all about increasing our market share in our established markets, accelerating our growth in the UK, and enhancing our platform to not just drive network effects, but to provide efficiencies for the business and a better service for our customers. So I'm going to talk to each of these three pillars separately in the coming slides. Next slide, please. So in our established markets in ANZ, we were quite clear that we were targeting health and beauty, travel, ticketing, and as key verticals for our business. You can see that we've been very successful in all of those verticals in adding significant players and well-known names to our mix, all of which are providing a great contribution to our GMV. From a ticketing perspective, we are the official Buy Now Pay Later sponsor of all the Super Rugby clubs here in New Zealand. That not only gives us the ability to support fans with their ticket purchases, it also provides them access to buy merchandise, etc., from their favourite clubs, which is starting to kick off, excuse the pun, very shortly here in New Zealand with the start of the super season. The new to Laybuy in Q3, for those of you in Australia, you'll see some very well-known names, the likes of Quicksilver, Board Riders, Billabong, Bingley, Kathmandu, and the Paz Group, amongst just a few that we have added over the course of Q3, and we have a lot more in the pipeline, which is pretty exciting for us. We can just go to the next slide, and we'll talk about the growth in our focus market from a growth engine perspective, which is the UK. What we've done here is just include a monthly GMV chart, so you can just see the trajectory we have been on over the course of the last 4 or 5 months in particular. Really accelerated our business. You can see that the December month, as I alluded, was up quite significantly on November, when last year we saw that come off slightly. So very pleased to have seen that trajectory. And most of this has been assisted by our app exclusive product that Kat has alluded to, which we are refining every day and improving the service to our customers and the return to Laybuy. What we find really interesting in this app exclusives is that repeat customers are 73% compared to 63% for what we call our direct channel, which is our fully integrated channel. We have had over 600,000 purchases since launching this product. And really interesting, the purchase frequency is coming out at 14.7 times a year. As I mentioned earlier, we now have over 300 merchants live, and some of those are household names, as we've listed here, the Amazons, the River Island, Sports Direct, Microsoft, Timberland, and Lego, just to name a few of those household brands that we have available to our customers now. Go to the next slide, please. The last pillar of our strategy was all about platform enhancements and how we would drive operational efficiency in our business, as well as offering a better service to our customers. And this is an evolution. So we're not sitting here doing nothing. Amongst growing the business at 42% revenue year on year, we're doing a lot of things to enhance our platform and enhance the service to our customers. Our tap to pay in-store solution continues to drive strong GMV growth, and we've actually doubled the volume in Q3 compared to Q2. As I've alluded in a previous slide, app exclusives continues to supercharge our UK business with that virtual card that is a combination of our partnerships with MasterCard and EML, really driving that customer growth and purchase frequency. We've also, to enhance the operational efficiency of the business and provide a self-help service of sorts to our customers, we've made available our customer service assistant, our virtual assistant called Hugo, and he is an automated bot powered by Mbit, and he is a very, very strong contributor to assisting our customers and now accounts for 10% of the customer inquiries that are coming through our customer support team. We've achieved PCI DSS level 1 compliance, which is an absolute validation of the efforts around security and data protection from our team, and we're very proud of that. We have also established our internal site reliability engineer pool, which means we can improve our operational engineering efficiencies and operate on a 24/7 basis. So we're covered now here in Australasia and again up in the UK. And the initiatives we are putting in place or have put in place and continue to evolve to combat fraud and credit risk. The fraudsters are sophisticated criminals. We are constantly evolving, adapting and improving to stay ahead of that game. And I will share with you some more information very shortly on another slide as to what else we're doing to support our efforts in that area. I'd just like to point out on this side that there's been a transposition of years. 2024 is actually in the dark purple. 2020 is in the light purple. But just pointing out that of these e-com payment methods. The two that are demonstrating growth are digital wallets and buy now, pay later, both of which Laybuy is a significant player in. So where we're seeing this growth out to 2024, we're right in the midst of it and determined to be part of that ecosystem and part of that growth. So if we just go to the next slide, please. I think what's really important for us is to outline where we stand with the regulatory regime. There's been a lot of discussion around the regulator in the US. We have no exposure to that. We are operating in Australasia and New Zealand, and we have been in regular consultation with Her Majesty's Treasury and government officials here in New Zealand. We have participated in the consultation documentation. We have talked with various officials, and we are supportive of appropriate, proportionate regulation that protects vulnerable customers. We have not resiled from that fact from the day we started. We set ourselves up as a responsible buy now, pay later provider. And from what we have seen and heard in our discussions with the regulator, we are arguably one of the best positioned buy now, pay later players in the sector to align to what the regulators are proposing for our industry. If we could go to our next slide, please. So from an outlook perspective, I think in looking forward, one has to look back and also celebrate the fact that we set out to achieve an annualized GMV target of $1 billion New Zealand dollars, and we've done it. And we are on track to achieve our revised revenue target as well. We intend to accelerate our growth in the UK and continue to drive the position we've carved out for ourselves up there. The UK is in its infancy, relatively speaking, in buy now, pay later compared to this part of the world. And we are a key player in that sector, and we continue to grow there and stake our claim. I've talked to regulation and the fact that we are confident in our business model that will align to those changes in regulation, and very, very much involved in that process. And from a new opportunities perspective, we are certainly growing our offering by way of and improving our revenue streams by way of an ad marketplace with the Laybuy app. We have recently appointed and announced a new COO. Our COO is a chap that may be familiar to some of you in Australia called Philip Finnegan. He is currently CEO of Temenos. We have just announced today internally the appointment of a CTO. His name is Todd Mansell. He is a New Zealander who has returned home after 20 odd years offshore, and most recently was in New Zealand with Westpac. Both these gentlemen have deep experience in payments and banking, and we are excited to have them on board as part of our team. We are also close to appointing a chief risk officer. He will be based in the UK. He has a deep experience in fraud risk management and credit risk management. And again, we're very excited to be able to include that sort of caliber of talent amongst our very talented team that we have already in the business. So look, the future for us continues to be a very positive one. We maintain our growth trajectory. We're very proud of our results, and we thank all our shareholders for their ongoing support. Thank you very much. We're happy to take some questions. So I've got a first question from anonymous attendee. The question is, we appreciate the work going on. Appears there is increasing consolidation going on in the buy now, pay later industry. Strategically, where does Laybuy stand in either fending off a hostile takeover or creating enough of a moat to be sustainable? Well, I guess the best answer that I can offer for that is that we're obviously very aware of the increased M&A interest in the sector. And as a company and as a board, we are diligently exploring opportunities that are in the best interests of our shareholders. The next question is, can you talk about competition in the UK and how it is impacting the business? It looks like OpenPay called off their acquisition and seems to be withdrawing from the UK. and Zip seems to be struggling. Looks like Laybuy grew in the quarter by more than the total GMV of Zip for the quarter. Yeah, thanks for the question. Look, I'm not going to talk about our competitors and what they're up to. I'm going to talk about Laybuy. We are powering ahead in the UK, and I think our numbers support that, and that continues to be our growth engine. And we are not bothered by competition. We see that as a good thing. We've staved off some pretty fierce competition down here in the Australasian market and done okay, and we're not worried about competition in the UK either. In a previous presentation, you discussed there is an impact on margins at the app exclusives. Has this been a drag on revenues at NTM this quarter? Are you working to improve revenue commission in the app? Yeah, most definitely. Look, we're evolving rapidly with our app exclusive program, and we're already seeing a quite marked improvement in the commissions earned off that. We've got another couple of tricks up our sleeves going into the next quarter, and you will see we are confident we will see ongoing improvement in that. So we're pretty happy about that.
I'll pick up the next one there, Gary, because it's very financially
driven. You've got that question.
Yep. Okay. So Mark has asked, are the VAT and GST refunds highlighted in the 4C a one-off or recurring? How should we think about this going forward? They're very much one-off. They're a residual hangover of us setting up a consolidated GST group in the UK. The HMRC took a long time to process some very historical returns up there. So they're very much one-off and a backlog of returns being filed.
Thanks, Kat. So we'll just give it a couple. Kat, you've got another question there.
So an anonymous attendee has asked, Katrina, can you expand a little bit more on the cost of funds and impact on NTM? Am I right in assuming that the total interest costs actually represent a small cost to the business? That's 100% correct. If you reference the 4C, you'll see that the interest rates derived by Kiwi Bank are less than 4%. We do pay a bit more with PFG around the 10% mark. 10.5 on the blended across the full facility. But because our book turns in excess of 20 times per year, the interest cost is very minimal to the NTM for Laybuy.
Thanks, Kat. I've just seen a question come up in the chat from Pete Reynolds. Pete, thanks for your question. Pete asks, when do you see the share price increasing, as it seems to just keep decreasing consistently over the last 18 months? Pete, that's a great question, and believe me, no one is watching that more closely than I am, I would suggest. We have little control over what the market sentiment is. We have delivered above and beyond every single promise we've made thus far, and that's all we can focus on. I can't, and we can't as a team, control what market sentiment does. All we can control is how we deliver, and I'm proud of what we're delivering. We've delivered our 1 billion annualized GMV. We've delivered growth and revenue, and we are continuing to grow. So the market will make up its own mind about that. But I would like to see the share price increase because I think we deserve it. I will, Kat, there's a 4C question for you from Mark, and then I'll answer the anonymous one.
So the question is from Mark, and he's referencing the large volume of cash that's held with Stripe over the year-end period, being the calendar year-end. So due to the number of bank holidays that fall around the December close period, being the Monday, Tuesday following the 31 December close date, a large volume of cash sits with Stripe due to bank delays with processing because of the number of bank holidays. So the 13.6 million that we've adjusted for in the 4C is akin to what we did last year to represent cash that's in transit to Laybuy, but it's just been held up with banking delays due to the bank holidays over that time frame.
Thanks, Kat. I have one more question here. Would you be open to a merger takeover approached. Look, as I stated before, we as a board are always exploring opportunities that are in the best interest of shareholders. So I can't answer more frankly than that. Russell Summers says, just on the share price, it would appear Laybuy is better known in the UK than in Australia. Newspaper reference to Laybuy as one of the top in the UK, yet in Australia, Laybuy doesn't even get a mention. Yeah, I noticed that, Russell. Fair to say that the UK certainly recognises us a lot more, excuse me, than the Australian market. You'll see a bit of PR activity ramp up over the course of this calendar year, and our name will get out there a little more. We have been very clear since we started our business that we want to support our merchants who ship or have a presence in Australia from New Zealand, and we want to grow our business in the UK, but we recognise it as a red sea of competition, and we are better looking after our shareholders' money by investing that in growth in the UK and growing that business than spending a lot of money in a highly competitive market that is Australia. Just a further question for Russell. Is there anything that Laybuy has in the works to bring attention to the Australian market? Yeah, we have got a couple of things coming out over the course of the next few months, Russell, so just bear with us a little bit there. You will certainly see a little more attention going in there, but as I alluded, we do need to be mindful of where the real growth is for us as a business and remain laser focused on that.
And the next one's probably in my domain, Gary. From a bank perspective, is there any short or medium term concerns around debt or equity ratios and covenants? No, at the moment we're well within all of our covenant suites. Most of it does sit around the quality of our loan book and the defaults, as well as minimum cash securities, but at this stage there's no concerns.
Thanks, Kat. Just wait another minute. It's great to be getting this many questions, actually. That looks like it'll be it. I'll just wait one more minute because we're closing in on the half hour. I suspect most people have set aside the half hour max. Question by Sam Pryor, does Laybuy have any expansion plans beyond the UK? Sam, right now we have been very focused on the UK because of the runway that we see available to us there. We want to remain focused on that market. We don't want to be schizophrenic. I don't want to distract the business by other shiny baubles across the Atlantic or elsewhere. We've got a lot that we can achieve here in the UK, and we want to maintain that focus. So right here, right now, it's all about Australia and the UK for our business. Thanks, Sam. Appreciate that. John White has asked, when is the next capital raise scheduled? Well, we're perfectly happy, John, with our cash resources at this point in time. And that looks to be about it. I'll just wait till 4 o'clock New Zealand time, and that will close out the half hour, just in case there's any final questions that someone has. Just in closing then, thank you again for participating on our webinar. And for those of you who are shareholders, thank you for your support. And I think you can see that we are demonstrating an execution to plan and a very, very strong resolve to keep growing this business and achieving what we set out to achieve. So thanks again for listening to us, and we look forward to presenting to you again with our year-end results sometime after March this year. Have a great rest of the day. Bye.
Thank you.